when we look out over the longer term, we still like the businesses of the majority of these FAANG stocks, and I think that's ultimately going to drive the day. You know, fundamentals continue to improve. These stocks, many of these stocks are now trading at multiples that are much cheaper relative to those fundamentals. So yeah, as we look out a little further down the road, you know, I'm not sure what's going to happen over the short run. You know, I think if the market continues to rally and if confidence continues to come back in, you know, given the fact that a number of these stocks, in fact, all of them are trading in correction or even still bear market territory, there's a case to be made that there's some fundamental value here. You still group them all as one, or do you separate them all? I separate them all. I think for so long they traded in this acronym-wrapped basket, and I think that was probably the wrong way to view these stocks. They're all individual, unique companies that should be judged on their own merits. And I think that's actually probably what we're starting to see this year. So in the rally, we've seen some light separating between these stocks. You know, we have had Netflix up 50%. Meanwhile, Apple's only up 5%. Amazon's doing fairly well, up 26. I think Facebook's up around 20. But then we have Google and Microsoft, and we add Microsoft to that basket as kind of a FAANG type of approach. And you know, they're up at what market performs. So we're starting to see some recognition that these are individual companies that should trade on individual fundamentals. You mentioned Netflix. A lot of people are going to be focused on Netflix this afternoon when we get their earnings report. That stock is up, as we said, since Christmas, 50%, a whopping 50%. Does that make sense to you? What are you looking for? You know, that's one we don't own directly out of that basket, and the reason is it's always been a bit of a valuation stretch for us. I mean, it's obviously a great business. The best guess on why it's rallied so hard is one of the reasons, obviously, is good companies that get hit the hardest, and they had a 45% retracement off their highs, often see the strongest snapbacks in a rally. And obviously, raising prices as of recent, they've shaken off a bad quarter in June, and we've started to see some positive news headlines on Netflix, and I got to imagine that's a good part of the reason why that thing has such a strong throwback. Given the headline and the headline risk on Facebook, what do you think about that stock right now? Yeah, so we still own that stock for clients, and you know, we're optimistic on it, cautiously optimistic perhaps. There's certainly still a number of overhangs and unknowns, regulation being one of the largest ones. For now, we don't think that's likely to upend the company or hurt their earnings power, just because we think that if you look at the reason why regulators would come in and try to clamp down on a company like Facebook, mostly, antitrust reasons. We just don't see that as being a big risk there. Obviously, public perception has changed on Facebook, but we haven't seen user engagement shift much. Advertisers still want to advertise with Facebook. Intent hasn't changed there. So Jason, looking at it, it's sub 20 PE, so we still like it. You mentioned the idea of regulators and antitrust. David Wessel from our Washington guru is here. I've actually been less worried, interested in regulation or antitrust regulation when it relates to Facebook, so much as perhaps for the Amazons or Googles of the world. How do you make that bet? Same. So as we look at, basically the foundation for why the Department of Justice would come in and look at these companies and say, they need to be broken up or spun out, or we need to make some changes here. Again, we're talking about very new markets, and if you look at the overall share of what Google and Amazon are doing, so for example with Amazon, I mean, they account for a very small portion of retail. Yes, they dominate e-commerce, but if you look at total retail spend, they're still under 10%. So it's hard to make a case that just because Amazon is doing it better, faster, cheaper, and because customers prefer to go there, that's a reason for them to be broken up. We just don't see that as logical.
But you would agree that the risks of regulation, antitrust regulation, privacy regulation that might squeeze their margins, they must be rising.
Yeah, I think there's some truth to that, and I think our take on that would be that that's probably discounted in a stock that's trading at a near market multiple that's growing in Facebook's instance, that's growing revenues north of 30%. So if this was a 50 PE stock or a 40 PE stock, I think there would be some asymmetric risk there. But as we look at where it's currently trading, one has to think that some of that is kind of baked in the cake. Okay, throw Alphabet into that soup. Low 20s PE growing at 20%, north of 20% on the top line. Dominating a business that is secular in nature. And again, as we look at potential regulation, it's just not something that has us terribly concerned. Obviously, across the Atlantic, Europe has been a little bit more stringent with Google, but even that, the company and the stock has been able to shake it off We don't see that really being any different here in the United States for now.
If you looked across those companies, which ones do you think has the weakest management and which one has the strongest management?
Well, that's a really great question, and management is something that we pay very close attention to. And I think Google obviously is very well run. Amazon is very well run. I mean, Facebook was well run until about a year ago, but the reality is, was it well run? Because a lot of the problems that Facebook is now facing were, the seeds of that were being placed, many years before. So Facebook certainly, I think, has a target on its back, and one has to say management is responsible for that target. So at present, we'd say that they're probably the weakest hand of the group, but we still think that they're trying to do the right thing. They're running a business. They have shareholders to answer to, and at the end of the day, they're walking a tightrope, and we'll see how that fleshes out.